All right, greetings all. Hope you all are well. So let's just jump right into the market here. Actually, let's see a CNBC website. I mean, CNBC is unwatchable. Like if I was in a prison camp and they forced me to watch that, that would be torture. All right, let's see. Apple misses. So let's see what Apple is doing. Um, yeah, I mean, I don't think that the tech stocks are going to be really what we need to watch over the next couple of days. So where's Apple? So Apple's up a little bit. So, it's up about there. But if we look at the different industries, let's look at the ETF of the financial industry. And this is at a really interesting point because it could be breaking out. Now, if a market's moving higher, it's basically because there's not enough supply or sell orders to fill all of the demand or buy orders. So the buyers are forced to bid premiums to get the sellers attracted. Now, a lot of times when you get to resistance, that ends. There's enough supply to fill all of the demand. Okay, all the sell orders can get sold. So the market stops going up. And then sometimes you get this situation where some of the sellers start to get concerned they're going to miss out. They know the buyer's going to get whoever is willing to sell at the lowest price. So they start to undercut each other and you get a snowball effect. It's the opposite of what goes on off of support, as we can see down here. But sometimes when you get to resistance, you break out. That means you get above it and you trade above it. Now, this isn't just symbolic trader talk. It tells us something. It shows us that the people who created the resistance with their sell orders are out of the way. Maybe they finished their order, maybe they canceled their order. Regardless, they're not there anymore. So now the buyers may come in, and guess what? There may not be enough supply to fill all the demand. They may have to bid premiums again. So that's why breaking a support breaking resistance or what we call a breakout tends to be bullish. Now, what we have done here is we've identified an interesting sector. All right. Now, what we can do next is go and take a look at the stocks that this sector consists of. And we could just go look at the sector ETF fact sheet. And I mean, I know what they are, but I will tell you. So Berkshire Hathaway is the biggest. So when we look at the benchmark, the index there, the industry we just looked at. I mean, the sector we just looked at. It's an aggregate of everything that's in it. So just by definition, there's going to be stuff that's more interesting, less interesting. First off, Berkshire Hathaway. All right, let's see what we got there. Nah, just looking for trading ideas. Nah, don't see anything there. Second biggest is JP Morgan. And it's like, are you as sick as Jamie Dimon as I am? It's like, dude, go away. I don't see anything there, but it's really kind of. This is actually a nice trend. I mean, if I was long this stock, I'd be pretty happy. This is what you want. Nice, slow going up. See, we broke above the resistance, the old breakout. And, now it's going up nice and steady. That is what you want. All right, Visa and MasterCard. All right. All right. We can look at this for a possible reversal because, oh, this, you know what? This is pretty interesting here. All right. Let's check this out. Let's throw the Bollinger Bands on there. Oh, I might have to write about this tomorrow. Yeah. So we're definitely overbought. All right. I mean, you can see it on the RSI, you can see it on the Bollinger Bands. But what I want you to focus on here is there tends to be really aggressive buying at two different times in a trend: the beginning of the trend, the end of the trend. The beginning of the trend is those smart people that are like, I don't care what it's up. We got to buy it. It's going higher. I don't care. Just go out there and buy it. That's what they tell their brokers. That causes us to gap. In other words, we close at one price and the buying is so aggressive that by the time the market opens the next morning, people are willing to pay a much higher price. So you get these price levels where there was no trading. And on a chart, guess what? It looks like a gap. Wow, look at that. You can even say that's two gaps in a row. So this is what we call a breakaway gap, potentially. Remember, this is an art and not a science, right? But potentially, this is what we would call a breakaway gap, and that's because people are not science. I mean, some people think they are, but it's more about reading things. Like when we look at a chart, we're looking at human psychology, right? It's like, when will they design a computer that can play better than Mozart? Probably never. I mean, get all the notes more accurate. But all right, shut up, Mark. Go back to the stocks here. So this could be the breakaway gap. The buyers are just like the smart buyers are just like, wow, this thing is so oversold. Let's go in there and buy it. I don't care what price. Now, this could be what we call the exhaustion gap. This is the aggressive buying that happens at the end of a trend. This is because you have all these people that are on the sidelines watching and they're like, I want to buy it. My friend Joe at the office bought it. He's up money, blah, blah, blah. But I'm going to wait for a better price. And it keeps going up and up and up. Finally, they're like, you know what? I'm sick of waiting for this thing to come back in. I'm just going to go buy it. I'm going to go tell my broker to buy it at any price. So you get this really aggressive buying. And guess what? These are the people that are the last to the party. So we could be looking for a potential reversal here. Now, let's talk about what could be a reversal trigger. In other words, time to jump in and buy some puts. All right, look at this. Sorry, I should have gotten this all set up beforehand. And we're just going to make this look a little nicer. Make this blue. And we're going to put in the upper bands here. All right, now what could be a potential? Oh, sorry. A potential trigger to get into this. All right, there we are. Now I understand what the hell's going on here. All right. Now, just because something is overbought doesn't mean it can't get more overbought. It can keep going higher and higher. What could be a potential trigger for you to say, all right, time for me to go in there and buy puts, right? It's like the starter has said, on your mark, get ready, get set, but they haven't said go yet. I would say, considering how overbought this thing is, a way I would look at it is, all right, if or when, because it's going to happen sooner or later. It's not a matter of if, it's just a matter of when. When this blue line starts to go lower, that's my trigger. That's when I go buy puts, right? This could keep going higher and higher and higher. If you wait for a trigger, your tendency is not to get run over. Now, my target on the short side, meaning where I would sell my puts, is right down around here. Former resistance. So this is a pretty, yeah, that looks like a pretty interesting trade to me. I think what's up next is MasterCard. Let's look at that. Yeah, kind of the same idea. No surprise that these stocks are kind of trading in tandem. I mean, if you really want to trade them, you'd have to like kind of really look at them. I mean, I could help you if you want. You know where to contact me, but which one's more overbought? Which one, will the potential reversal, if it happens, be bigger? Because it's kind of pointless to put money into both of them because they're going to trade together. It's like you just got to figure like which one does it make more sense? Where do you get more bang for your buck? See right there, perfect example of support becomes support. All right, next up, Bank of America. Yeah, you see, I don't see anything there, right? Not overbought, not oversold, neutral in the middle of a range. We could just move on. Wells Fargo. Kind of the same thing. Looks like a little bit of a breakout, but definitely not something that a trader would want to look at. I mean, in other words, it's not really going to move much. It doesn't mean a long-term investor wouldn't want it. Yeah, kind of the same thing here with Goldman, Gold Mine. Okay, American Express, Morgan Stanley. Right, nothing going on there. Can you guys believe I'm actually interviewing for Morgan Stanley to be a writer? Nothing too great going on there. All right, well, you know what? We went through the sector. The sector's overstretched. I think it's being led by Visa and MasterCard for some reason. I don't know why. but I think we can key in on these for potential reversal ideas over the next few days. And yeah, that's it, everybody. Thank you so much. I appreciate it, and I will see you all soon.